JB here. Hope everyone's doing outstanding. Monday, March 24th, 3/16. Let's find Monday afternoon. Talk about the market. Some names I'm looking at. Go from there. S&P rally mode. S&P's up about 1.8%, continuing its bounce off of lows on Friday. And Matt, what a difference a couple days makes, right? I mean, the VIX, I was talking about all last week. It was kind of, even during some of the rough sessions, the VIX was kind of flat or barely green, and now it's down here at 1763, down another nearly well, over 8.5% today. So I guess the VIX was right? But you still look, and I always Market Watch is one of the great uh, sites to go to kind of read the fear mongering headlines, because usually when markets are soaring and at highs, there'll be bullish articles, but the hint of any kind of weakness, and it turns into fear mode. But today it says peak uncertainty on tariffs still looms over stock market despite Monday bounce. I'm like, peak uncertainty? I really don't think it's peak uncertainty. To me, honestly, I've almost felt like over the last week or so was like there was peak uncertainty last week, like the worry that, hey, there's going to be huge impacts. And now I think over the weekend, with some of the ratcheting back of the comments, how the tariffs will be a little more specific, less, uh, more narrow, and not cumulative and things like that. I think that kind of scales back some of the fear and uncertainty around what the impacts, right? The major impacts. There's still going to be impacts, and I'm sure there's still going to be things are still going to get worked out. Some tariffs might get start April 2nd. Some might go for a week and they might work things out. So I think there's a lot of moving parts, but for now, we're getting the relief bounce. All the folks on FinTwit, you started, oh yeah, but markets was going to bounce. Look at this chart from Friday or whatever. There was so many people who were bearish. They're ready to, they had their bear suits on. They're ready to get into the bomb shelters. And today, magically, uh, yeah, they called the bottom. But anyway, so for me, I've been saying for the last couple of weeks, I've been keeping things small. The past couple of days, I've been the puts. The good thing is the put hedges were kind of expensive to play for more downside, so that kind of prevented me from getting put hedges on Friday and able to get the reverse. So take a look at the SPY back over its 200-day moving average. 570.02 is the 200-day. We're at 574 here. I think that I was talking about this morning. I think that 582 is the next target. I don't know. I mean, it'd be a monster rally again tomorrow if we hit that, but I would hope maybe a little consolidation, solid green day tomorrow, and then we can talk about that 582, and then it's kind of like wait and see mode from there. But strong day. I mean, the VIX kind of has been the sign, and those the pinchers, the bullish crossovers on momentum indicators, all those kind of signals, they finally played out, right? So I was saying last week and the week before in regards to the charts, they're history lessons, right? So sometimes history repeats itself, sometimes it doesn't, but most times it does. So it kind of helps. And then the VIX. I mean, take a look at this VIX chart. You would just think that the market's kind of back in, uh, you know, rampant to all-time high mode. The VIX is, uh, it was more volatile in September, October, the last week or two. So, yeah, time will tell. All right, so that's kind of the overall market there. So definitely, I mean, that 563 handle, if we do get some kind of reversal at some point in the coming weeks, coming days, that'll be a big spot. 200-day moving average, I think if we can hold that, I think that'll bode well for at least a continuation of this rally for the next day or two. Um, and then it's the catalyst. Like what other catalyst can really pull things? We have the final read on GDP. That's on Thursday. I don't know if that'll do much. A crazy surprise number on the PCE data, maybe. And then headlines, like surprise headlines, right? So that's kind of the overall market. And again, I think this dollar story, you don't really see much chatter around how much of an impact that might have earnings. Everybody's worried about tariffs hitting companies' earnings and what are they going to say on their conference, all that stuff. But like when the dollar's stronger, you always hear the folks either saying, hey, our company hedges, we have hedges on to protect ourselves, or it's a headwind. And the reverse, when the dollar's down 4% over a very short period of time, you have to think there's some positive impact, especially on some of the multinational names. All right, so that's overall market. So then individual names, Roku gapping out of the gate. Well, I was hoping, and it was over 80 in the pre-market, ran all the way up to 81 to change right out of the open. I was hoping the calls were going to be up, with the 85 strikes will be up a heck of a lot more. And I think they hit like 80 cents, 70 cents, but the bid ask was wide. I didn't have a limit on to take advantage of that. And then it's trading around $80, and I was concerned, and Some of it's the post-traumatic stress disorder with Roku over the last couple months, where it has these gaps in the morning and then reverses it for the rest of the day. I didn't want to be in a spot where I lost more of my gains, so I locked the rest of my calls in for over 100, like 150%. And then I was possibly looking for some strikes into next week. I'll be patient. It is over its 50-day moving average, 80-60, so maybe that bodes well. Um, but definitely a name I'll continue to have on radar for this week, especially if the market finds footing again tomorrow and finds a bit. So that's Roku. And then on the flip side, so Shopify had the calls last week that they didn't work out so well. Watching again this week, and sure enough, the calls I would have had on Friday would have paid out nicely today. So a day late, dollar short, or a day late, lots of dollars short. But still, I think some of these names have been beaten down, especially names that would be impacted by the tariffs and not news driven, right? I don't think a lot of people are shorting Shopify just on that premise, but I think a lot of uncertainty has caused some of these names that have possibly, like Canada. How's Shopify really impacted too much by tariffs, right? Just because it's a Canadian company. So always looking for opportunities there. That it's 50-day moving average 109.69 was breaking that. I went and got some weekly strikes. Gets over 110. I was hoping for follow through. That didn't happen. The premiums weren't really going up as much as I would like, so I closed them out. At some points, I think they were up over 60%, but I closed them out for about 30%. I'll revisit. Especially again, similar to Roku, if there's follow through tomorrow, that 50-day moving average 109.69, it's at 109.87 right now. So could go either direction. So I didn't want to see those profits evaporate. And then on the flip side too, Wayfair has been a name I've been watching for a while. That thing's down from $50 since the end of February. Again, I think some of it's tariff concerns. Some of these names, especially Wayfair, the furniture, the shipping part of it, where they get it, the logistics, all that stuff. It's not like all their products are manufactured and procured from the United States, right? It's abroad, and a lot of it's in Asia. So some of that, I think, again, is that a name like Wayfair comes under pressure because there's got to be some kind of cost ramification, and because of that, it's a name that's kind of, I wouldn't say it's priced for perfection, but it has a high short interest. Shopify, I think, has a 6% short interest. Wayfair has a 20% short interest. So then I'm looking for other names to take advantage and move. And I was looking at Restoration Hardware. I'm like, oh, Wayfair is a great name. And then I almost got some at 2 o'clock. It was 36.50, and then it just has been melting higher ever since. So I went and got some weekly strikes there. Unlike Shopify, it's not near its 250-day moving average yet. That's at 41.71. So it might have more. It has, in my opinion, more upside potential. So I went and got those strikes. We'll see if there's follow through tomorrow. I mean, on the negative side of it, it's up from $30 on Friday, but I mean, it's down from 50. So you can make the case on both sides of the spectrum. I like this for upside. Once they get to a double, I'll close them out to cover costs and ride the rest. That's Wayfair. Not much here to add on GameStop. I mean, I'm just disappointed. The premiums are not doing much, and some of that it's a function of its earnings tomorrow. But even that, you usually have premium build into earnings, and I don't know if there's other events priced into the stock that the premiums are just not doing much. But my calls are flat, and it's up pretty much over a dollar from when I got them on Friday. So it is what it is. I was hoping not to be in a spot where I'm going to hold the calls into earnings, but the more I look at what's going on, and I don't know if I mentioned this morning, they added a new investor relations webpage that was on Wednesday or Thursday, March 20th was 24th, so maybe that's Thursday. And then if you go into the coding of it, the HTML or CSS or whatever of it, you actually see there's a header for mergers and acquisitions, but it's not on the webpage. You have to go into the coding for it. So obviously there's something in the works in regards to M&A, and then they got to be doing something with that 4.6 billion. It's almost like I wouldn't call it a travesty of leadership, but they raised cash using the company, using the stock, and then the cash is just sitting there. So you got to do something with it, right? And I mean, I don't think you go old school way and just buy back stock and issue dividends unless you want to do it. I was talking about Restoration Hardware's early stages of reversal, where the CEO went nuts and raised cash and just went bonkers buying back the stock, billions of dollars. I don't know if GameStop's going to do that, and especially their outstanding. Why would you? I just don't see them doing that. So I would think it's either going to be some kind of Bitcoin reserve, crypto reserve, something like that, or some M&A. So either way, I think there'll be some announcement. The stock, if it's If it's something related to crypto, it's probably going to go over $30. So calls are inexpensive on a risk reward base. I'll probably hold them into earnings. I was hoping not to hold all of them, but looks like I won't have a choice. So that's GameStop. Then other names, I've been watching URI for this bottom, and the longer the base, the higher end space. I mean, it's up 2.6% here. Definitely names similar. URI and CAT. I'm back on radar if the market finds footing this week. Disappointed to miss out on AMD. I mean, gosh, that's I always call it the forgotten stepchild. But take a look at his breakout. I mean, from you take a look at a stock that has a downtrend. I don't even have to draw the line of the trend line. It's the 50-day moving average, and boom, it's over its 50-day today. You make the case this goes into the 120s by the end of the week. Yeah, I don't want to have too much risk on just because I'm, like I said on the watch list one. I don't know if we're completely out of the woods, and who knows if we get any kind of crazy headline that comes out. So I'm still kind of keeping things cautious on the taking on risk side, but certainly an interesting name. And if I didn't have Intel calls still, I probably would have got some AMDs, but what are you going to do? So that's AMD, and then Intel. If you look at the chart actually looks pretty good here. I just got a whole grain. It's kind of flat right now. You would think it'd be up substantially more with the S&P up 1.75%. But again, consolidating that huge gap from the CEO news, so maybe that's some of it. And if you can get some wings tomorrow and Wednesday, start getting over 26, then I think that 28 and change area comes the gap fill from back in the summer. That one's good to go. And what else do I have up here? Intel, AMD. Oh, Ralph Lauren, right? So Ralph Lauren was another one of those tariff plays where it's been destroyed. All-time highs back in February 19th with the NASDAQ or right around then, and then just in sell mode ever since. Again, concerns similar to like Nike, right? That a lot of their products are manufactured at a very low cost abroad, and then when there's an increase in possible tariffs and all that fun stuff, you have to think, just even if it's just a smidgen of impact. I mean, a name that just hit all-time highs, you have to think there's opportunity. But now you're on the flip side, so maybe it was oversold, and you look on the chart for Ralph Lauren, it's got another name with a bullish crossover on the momentum indicator. So tough to play. The March expiration just happened, so have to go to April. But I'll be watching if there's an opportunity. As it looks like maybe some of these tariffs going to get rescinded, and U.S. and China have some better relationships. Maybe that's the reverse side of it. Maybe it's even uber bullish for some of these names. So that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.